Welcome to a new week. You're watching Business Morning live on Channels Television, 10 a.m. right here in Lagos. Great to have you join us. I'm Ladi Williams. First off, let's take a look at what's happening in the oil market. We see oil prices rose today, extending gains from last Friday, helped by growing optimism that the Omicron coronavirus variant impact will be limited on global economic growth and fuel demand. Brent futures climbed 53 cents to $75.68 a barrel after rising 1% on Friday. And we see the U.S. West Texas Intermediate crude futures gain about 69 cents to $72.36 a barrel. Both benchmarks posted gains of about 8% last week, their first weekly gain in 7. They have recovered more than half the losses suffered since the Omicron outbreak on November 25th. And back here, the Nigerian National Petroleum Company Limited has announced a huge leap in trading surplus, about 141.96 billion naira recorded in June 2021 compared to a deficit of 37.46 billion in May 2021. According to the June 2021 figures of the NNPC monthly financial and operations, the increase in trading surplus was due mainly to the increased sales of crude oil and gas by a Nigerian Petroleum Development Company. In the gas sector, a total of 223.77 billion cubic feet of natural gas was produced in the month of June 2021, translating to an average daily production of 7,459 million standard cubic feet per day. For the period of June 2020 to June 2021, a total of 2,890 cubic feet of gas was produced, representing an average daily production of 7,321 million standard cubic feet per day during the period. And after the break, we get an in-depth analysis into the 2021 finance bill. That's in a moment. Do stay with us. Welcome back now to our first conversation. The 2021 finance bill, which was transmitted to the National Assembly by President Muhammadu Buhari. We see one interesting part is the bill seeks to tax the profits of company, any trade or business without a base in Nigeria. Well, we'll get more insight now from Ajibola Olumola, partner, Tax Regulatory and People Services, KPMG Nigeria. Great to have you on the program. Good morning.
Good morning, Ladi. Happy to be here.
Great to have you. Well, 2022 is looking like it's going to be a very interesting year, regarding the federal government's plan to raise revenue via taxation. Tell us more about this bill.
Well, it's an interesting bill. Firstly, one must commend the current government, the President, His Excellency, President Buhari, the Minister for Finance, Budget and National Planning, and the tax authorities led by the Chairman of the Federal Inland Revenue Service for being consistent in terms of an articulation of the fiscal policies that will underpin revenue generation and fiscal revenues accruing to the federal government of Nigeria, starting from 2019, when we had the first finance bill promulgated after a hiatus, if you like, of nearly 20-something years. The last bill, the last finance act we had was in the days of the military in 1999, and now this was reintroduced in 2019. And there has been a consistency every year in bringing through the budget proposals for the bill versions of finance bills that signal the direction in which the economic planners want to move the country. And 2022's finance bill, which has just been presented to the National Assembly, will be the subject of public hearing at the House of Representatives this morning. And it follows consistently on the principles of the previous versions. And so you're looking at closing tax gaps. You're looking at harmonizing Nigeria's tax laws with international best practices and international trends. Interestingly, as you opened the program this morning, you referenced Nigeria bringing in regulations for taxing foreign companies that participate in this economy and derive value from this economy. That's one of the signposts of this year's finance bill that has now been submitted to the National Assembly. It's quite an encompassing legislation, identifies other areas of gaps in the fiscal net and makes reasonable proposals to trying to address some of those gaps.
All right, so looking at taxing some of these digital companies that do not have a presence here in Nigeria, I'm wondering how is this going to work? Taxing, for instance, a company like Facebook and AliExpress. How's that going to work, really?
Well, the thing about tax is that it's situated on a tripod. So you first have the tax authorities, the fiscal authorities, you have the taxpayer, and then you have an intervening arena where they all, correspond. To answer your question specifically, it is in the interest of the global digital giants to work with fiscal authorities all over the world to have a harmonized way of tracking revenues in every fiscal area where they work. And it is not surprising, if you take Facebook one as an illustration, that Facebook has announced that advertisements that are placed from Nigeria will now attract a VAT of 7.5%. That tells you that Facebook itself is taking steps to bring itself into compliance with the rules in every geography where it operates. Now, you might ask, how would Facebook know that a customer that's viewing or opening its pages is located in Nigeria? And the answer is technology. So each time you log in to the internet, your computer's IP address is logged. So absolutely everybody you are dealing with, if they wanted to, can identify where you are located, down to within a few centimeters of your current location. They know where you are. And so they know who is transacting with them. It's also for anti-fraud purposes and to also enable the global transactions in commerce to go on in a harmonious way. So everybody knows who they are dealing with. Facebook knows when it's dealing with Nigerian counterparts. Alibaba knows when you've ordered goods for delivery to Nigeria. So what they now have to do is work in a cooperative manner with the tax authorities in Nigeria. Where they need to register for tax, they can register for tax. The proposals in this year's finance bill even provide a situation where they may opt to appoint tax agents in Nigeria that can assist them in complying with their statutory obligations here. Obviously, these are new proposals. There will still be a bit of devil in the details and a few things to be, hammered out between taxpayers and the tax authority. Okay. But we hope that this can be the beginning of a dialogue.
Right.
But would it, compliance.
But would it require these companies actually having offices here in Nigeria?
Ordinarily, it shouldn't. However, bear in mind that the world is now a global village, and it is also in the commercial interest of some of these giants to sometimes have offices in some of the geographies where they operate. So the tax provisions will not necessarily require these global giants to have offices in Nigeria, but there may be other business reasons why they choose to do so. For example, we heard a few months ago that Twitter was considering opening an office in Nigeria. They had opened one in Ghana. So there are very many business reasons why global giants will decide where to put a firm footprint or whether to only operate through a digital footprint. But tax is just one of the consequences of operating in the fiscal environment. And Nigeria would allow some of these global giants to appoint agents to assist them in country if they don't want to come in here fiscally.
Okay, but there are also concerns, that the burden of these taxes will be passed on to, merchants and users of these platforms. What's your take on that?
That's a very good question, and it's a very pertinent observation. You're absolutely correct. The cost of this taxation would ultimately, in some form or another, be passed on to the final consumer. But bear in mind that that is expected to be the case anyway. VAT, value-added tax, for example, is expected ultimately to be borne by the consumer, by the final consumer of the product or the service that is the subject of the charge. And if you think about supply of goods, again, if you were bringing goods into Nigeria today, whether you were you purchased the goods in Nigeria, from wherever, you would pay duty at the port of arrival, which would also include a VAT on the cost of the goods you're bringing into the country. So yes, there will be an effect on consumer prices, and we can expect that the fiscal planners would also need to think of other ways of managing whatever negative consequence that may bring from an inflation perspective or other consequences of having an increase in consumer price indexes.
Right, and I see that the bill also seeks to compel every account holder in Nigeria to have a tax identification number, that's a TIN number. Is this still the case, and what are the implications of this?
Well, not in this year's version of the finance bill. I didn't see any such proposal in the version of the bill that's been sent to the National Assembly. It may very well be that this comment is hankering back to previous finance bills, finance acts that have already made provisions for taxpayer identification and harmonization of databases between the tax authority and the banks. And for those who are familiar with the protocols for bank account opening, today, having to submit a tax identification number is one of the information requirements that banks will ask of you today. So that is not a matter that is stipulated in this year's finance bill, but I'm aware that it is a matter that is already in the Know Your Customer protocols that banks have to undertake, and previous finance acts have already addressed this.
All right. Looking at some global tax matters now, see, Nigeria in October rejected a tax pact signed by about 136 countries, which aim to enforce a corporate tax rate of at least 15%. What would you say is the concern here? Why the rejection?
Well, again, that's a very astute observation, and it's one that has taken the Nigerian public by surprise. And a lot of questions have been asked as to the what sense it makes for Nigeria to stand apart from the global consensus on these very important areas. And the Federal Inland Revenue Service has been very proactive as well in trying to engage with the tax-paying public to explain, in a sense, why they have taken the decision at this time not to sign onto some of those frameworks. Of course, Nigeria is an active participant at the United Nations level and also the OECD level, where Nigerian representatives have been actively involved in the negotiation of many of these trade deals and tax deals. My understanding is that if you look at the way the current framework is stipulated or grounded, it is intended to look at and capture global giants of a minimum size. Now, from the perspective of the developed world, that minimal size makes sense. If you're looking at $500 million of revenue, $300 million of revenue, those are really good numbers from a developed country perspective. From a developing country perspective, $500 million may mean that Nigeria is not able to tax any foreign digital player other than the really, really big ones. So how many foreign players will derive $500 million worth of revenue from Nigeria in a year? You'll probably find that maybe only one or two. So from a Nigerian tax authority perspective, signing on to the deal in its current form will lead to hundreds of companies falling outside of the tax net. Companies that are today in the tax net that will from tomorrow stop paying tax in Nigeria. Now, that appears to be the consequence that informs Nigeria saying, hang on a sec, let's also think of developing countries and let's come up with a framework that also addresses the peculiar perspectives of developing countries. Now, I understand where they're coming from, the FRS, and I think the rest of the world must listen to Africa and the other developing world and think of frameworks that make sense from a developing world perspective. But from a taxpayer and tax advisor perspective, obviously, we like to see consistency. We like to see harmony with global trends. And so our appeal would be to the United Nations and the OECD to engage with Africa, Nigeria, and other developing countries in the world in a manner that allows us to bring all these views to the table and come up with a framework that makes sense for everybody so that we can all go forward together on the same principles and the same foundation. That is what will make it easier for global giants to continue to grow and to continue to contribute to the development and growth of the world's economy. So those are very pertinent questions, Ladi. And I think the answer would be in getting parties to just come to the round table and discuss these things in a very honest and transparent manner. And I must salute the Nigerian fiscal authorities. It's weird to have to commend them so often, but truly they deserve commendation because in this one, they've been on road shows, explaining themselves, letting us know what's going on, and telling us how they intend to continue to work with the UN and the OECD and other trade partners in resolving the dispute. So I hope it's resolved as soon as possible.
Hopefully. Well, we'll keep tracking that. Well, the World Bank has called on the federal government to impose special taxes on alcohol, cigarettes, and sugar-sweetened beverages to, improve primary health care. Is this the way the government should be towing at this point?
Well, we all read in the papers over the weekend about the World Bank encouraging Nigeria to introduce what we call sin taxes, because, it's probably politically incorrect to use that phrase in Nigeria, but that is the phrase that's been used in many other countries of the world that have introduced such legislation. And it's not uncommon. It's actually very prevalent across the world now to see an increase in fiscal rates, whether it's in excise duties, in special taxation, directed towards some of these exotic products, whether it's sugar, carbonated drinks, cigarettes, things that contribute in a larger than usual percentage to incidents of the state having to intervene by providing advanced health care to its citizens. So it's not surprising to see the World Bank making recommendations to Nigeria to consider the introduction of such taxes. Now, of course, you would expect that the Manufacturing Association of Nigeria and companies in the fast-moving consumer goods space would be a little bit challenged because they might say to you that, oh, Nigeria, we already pay so much taxes. So if you increase the tax rate, the hurdle rate, like you also asked earlier, Ladi, will this cost be passed on to the customer? So if you increase the tax rates on sugar, what that then means is that companies that produce soft drinks might be motivated to increase the consumption, the cost price of a bottle of soft drinks in order to compensate themselves for the increment in excise duties or increment in taxes as a result of introduction of same tax. So you've got to then say to yourself, what is the capacity of the Nigerian consumer? How much, how expansive, how elastic is our purchasing power? Because there's no point increasing the excise rates to a point where consumption drops, which means that the revenue of these companies drops. And when their revenue drops, it means that their contribution to tax will also drop.
Right.
On the other hand, you don't want the rate to be so low that we consume these things to a destructive level. And then even the little increase in tax revenue will then be used in financing advanced tertiary healthcare, which then places a higher revenue, higher expenditure burden on the government to provide for healthcare. So it's a balancing act that the regulators have to play.
Yeah, very serious balancing act there. Well, I'd like to thank you so much, Mr. Jibola Olumola, Partner Tax, Regulatory and People Services, KPMG Nigeria. Thank you so much for coming on Business Morning.
Thank you so much, Ladi.
All right, after the break, we'll take a look at Nigeria's rising debt stock. That's in a moment. Do stay with us. Welcome back. You're still watching Business Morning live on Channels Television. Now to our next conversation. We see debt is one major issue affecting countries in the world. And, COVID-19 has increased the rate of borrowing and spending for most countries trying to support their economies. World Bank International Debt Report 2022 has provided deeper insight into how Nigeria's total external debt stock jumped from just $18 billion in 2010 to about staggering $70 billion in 2020. Well, let's talk to Oladipo Ajayi now, head fixed income, Chapel Hill Denham, to bring us more on this. Great to have you on the program. Good morning. Great to have you. Yeah, so I see, Nigeria's debt is reported by World Bank currently stands about $70 billion. What's your take on this?
Well, if you look at the issue on the ground, it's not peculiar to Nigeria. This is more like a global issue, as to speak. Globally, debts are actually increasing, and even if you look at the African space, it's not only Nigeria, if Egypt, South Africa, Ghana, but the main issue that we should actually look at is are we actually seeing the value of the debt that we actually amassing? That's the main thing that we need to consider. It's not about the level of borrowing, but are we actually seeing the impact of the borrowing? It's not about the level of the borrowing. Do we have the capacity to actually service the debt? Those are some of the things that we need to actually consider. Because if you look at it critically, the totality of the external borrowing is about $70 billion. If you compare that to our counterpart, South Africa, that is about $170 billion. But what we need to look at is that do we actually have the capacity to debt? What is our revenue generating capacity? And all that is those are some of the things that we need to consider rather than the debt itself.
Because it's quite worrying because, debt is practically spending tomorrow's money today. How can we, make sure that these monies that are being spent, we can actually get value for tomorrow?
Yeah, I think that is exactly what we need to actually look at. And that's one of the reasons why before the government can borrow, we need to go to the house, and the house needs to actually approve the borrowing before they can actually go into get any form of borrowing, whether locally or externally. But however, I think the legislation they need to do more than what they're currently doing on that front. They need to also go beyond approving the loans, also ensuring that the loans actually are deployed for the reasons why the loan was actually taken in the first place. So I think for us to be able to actually get value for all this borrowing, the government actually work to in tandem with the house to ensure that the funds that are actually borrowed are deployed for the reasons why they're borrowing. And also, we should also actually stop borrowing for consumption. When we borrow, it should be focused on the position of infrastructure, considering the level of infrastructural deficit that we actually encountering in the country. So by actually providing infrastructure is a way of providing for the future. And by so doing, the future generation will also be from today's borrowing.
All right, looking at the current figure, considering where we were a decade ago, should we be worried?
Yeah, if you look at the rate of movement, our borrowing has increased by about a whopping 288%. And we compare with South Africa, that's actually increased about 57% in the last decade. It's a cause for a concern. And one of the reasons why I feel the cause for a concern is that aside looking at the debt increase, we also need to look at what's the level of revenue increase within the same time span. If you look at it fiscally, we will not increase our revenue generation in the same manner as our debt borrowing level. So I think it goes very concerned because I expect revenue to actually improve in a better dimension than our level of borrowing. So because revenue is not growing as far as our borrowing, I think it's a cause for concern.
All right, and South Africa and Egypt external debt currently stood at 170 and 131 billion dollars respectively. Will it be right to say that Nigeria is faring, better in comparison to these countries?
Yeah, if you look at it in the figure term, it means that Nigeria is still very conservative when compared with these other African giants. But another thing we need to also look at that we have to look at the level of infrastructure in all those countries. The level of infrastructure in South Africa is far greater than what we have in Nigeria. And at the same time, we also have to look at it from this angle. To speak, Egypt is the first destination of FPI or FDIs in Africa as we speak. And also South Africa is number three on the log. Nigeria is not even among the number one as was released recently. So it also is a cause for concern. Although our level, when you compare with the level of debt that currently are in comparison with our competitors, it might actually be low. But if you look at the value from the what we have borrowed, I don't think we are actually having value for what we are amassing.
All right, and the DMO office announced the likelihood of additional borrowing of about $2.18 billion in the Eurobond market before the end of the year. What is your take on this decision?
Look, my own view is that I think the DMO missed the mark in the first time. That they should have taken the whole 6.18 billion from the market in September. Their decision to actually wait a bit longer than this to keep the balance, I think is actually it's not so good for them because the market is not very positive when you look at it when you compare to when we actually went to the market in September. As we speak now, the market is very empty. The market is that Fed is currently now becoming rather than the dovish that they were in September. So some of these things have actually put the yield of instruments up in the market. And as a result of that, it means that we are going to the market now. We actually have to pay a premium compared to what we actually paid in September. So I think we missed that opportunity. However, I think because it highlighted already that they need to actually do borrow about 6.18 billion from the international market, the Euro market. So I think they will still need to actually do that to actually be able to actually meet the price of the borrowing for the year so that they can be able to fund the budget appropriately. So for us, we think that the decision should have been taken in September when they should have taken the whole 6.18 billion rather than waiting to now.
The DMO is expected to reopen two bond maturities issuing of about 50 billion naira each. Can you talk us through your expectations on these?
Yeah, for this week, the DMO is coming to the market to raise 50 billion each on two instruments, 2020 and 2037 maturity. And compared to the previous options, this is more like the smallest volume that we are seeing of options by the DMO. Because currently they are just doing 100 billion compared to the past 150 billion on a monthly calendar. And based on the DMO's comments in the meeting with the Senate recently, where she actually said that currently they have on the local front, they still have about 350 billion to actually borrow to complete their borrowing plan for the year. And they are looking at coming to the market with a bond of about 400 to 450 billion dollars. So it means that the balance will be taken in the monthly bond option scheduled for this week. So what we think that the rate will actually close about where markets currently trading, and because we are not expecting PMO to be aggressive in this option, considering that they currently don't have much to take in the market, and they've already stated that they are looking at coming to the market with a good bond. So for us, we think that the rate will actually close around where markets currently trading. So we don't think it will have that great effect on the bond market.
Okay, but what will be the impact of this week's auction on the fixed income market?
Yeah, for us, we feel that the market will be a bit quiet for Monday, Tuesday, Monday, Tuesday, Wednesday. But when the result for the auction comes out on at the end of trading session on Wednesday, we think market will actually trade in accordance to the rate, the marginal rate of the auction. So we feel that we expect the market to actually close, the auction to close where markets currently trading. So we think what will happen is that post auction, people will be able to actually trade appropriately, people will be able to actually align their portfolio appropriately. And portfolio manager will be able to rebalance their portfolio for the year because this is more like the last auction for the year.
What's your, outlook, for the rest going to the end of the year?
Yeah, this is the last auction. So we think after the auction, the market will what we just be seeing in the market that a lot of portfolio Japanese market to actually restructure their portfolio, to actually rebalance their portfolio, and that will actually create a little activity in the market because some of them might be moving from a shorter dated instrument to a longer dated instrument, while some are moving from a longer dated instrument to a shorter dated instrument. And also considering that next year, January, we are expecting close to about over 800 billion in form of company maturity of bonds into the market. So as a result of that, we might also see traders actually taking position against the inflow that we're expecting in January.
Thank you so much, Oladipo Ajayi, the head fixed income at Chapel Hill Denham. Thank you so much for coming on the program.
You're welcome.
All right, for an opening call to the market now, we have Willie Bong. Hello, Will.
Good morning, Laddie. It's good to be back again and see you. So we're just going to jump in and bouncing off what the conversation you just had with Laddie, Ajayi there. You said the forex activity at the FMDQ market was mostly positive last week. We saw a total turnover of transactions carried out at the FX spot market, which was up 37.54%, and the total turnover for the week was at $1.17 billion. That's a 31.16% rise. And now moving on to the NAFEX window, we saw that the NAFEX window, we saw that there's a 0.09% drop in the price of the naira against the dollar. Is currently at 413 naira and 96 kobo to a dollar against the 413 naira 60 kobo to a dollar, which we saw in the previous week. Now we move over to the fixed income market. We saw that the local bond market traded sideways last week with higher volumes traded at the mid end of the curve, and at the end of trading on Friday, we saw bulls dominating the market with sell pressure across the board. Now average overall benchmark yields closed at 8.04%. Indicating a week-on-week decline of 0.5%. And notably, we saw that the DMO has released the December 2021 bond auction circular indicating 100 billion naira on offer across the two instruments, which is January 2026, 50 billion naira for that, and April 2037, which is also that's 50 billion naira. The Treasury bills market, we said there was basically no trade. The week started on a very quiet note with minimal volumes across board, but activity picked up later in the middle of the week. Investors took advantage of higher yields, and now at the close of trading, the market was bullish, but we still see that there was no significant trade that was transacted across board there, and at the Omo markets, bills, average yields remain flat. CBN special bills grew by 10.75%. Now we're just going to quickly talk to Akwewe Oputu, that's a fixed income dealer at Access Bank, to tell us what transpired last week and the outlook for this week. Good morning, Akwewe.
Hi, good morning.
Could you just quickly tell us what factors influenced the forex trading last week? We saw that the total turnover was mostly positive. We only had the negative at the forwards market, but what's driving sentiments there?
Okay, at the FX market, we saw a slight appreciation in the naira, and day on day last week, Friday, we saw 12 kobo appreciation to close the week around 414.2 naira to the dollar. But we continue to see paucity of funds in the INE window as demand continues to outweigh the supply in the market. So We saw the greenback weakened against the naira to close at 415 naira to the dollar as at Friday. And we also saw the CBN come into the market to conduct the biweekly retail SMIS auction, and we saw rates trending at similar levels in the market. And in the NDF market, we saw the CBN continue to sell to the foreign portfolio investors. The 12 months NDF still remain around 436, and while the 5 years still trading at 614.32 to the dollar.
Okay, so now we're seeing bullish sentiments in the fixed income market, especially for the bond market, and the treasury bills market closed bullish. However, it started on a quiet note. What would you say? How do you think the market will fare next week based on the market liquidity situation?
Okay, there's been a lot of demand on the fixed income space. We've seen low amounts on offer at the NTB auction. I think a total of 53 billion was on offer last week at the auction, and the DMO was able to roll over the 53 billion that was offered. For this week, we expect 5 billion to be on offer, so that has actually dropped compared to what was on offer last week. So we'll see a lot of subscription at the auction, and portfolio investors trying to see how they can get good yields because the year is coming to an end, and this is almost the last auction for the year. So people trying to place their funds before the year ends. So we'll see a lot of demand in that space. There's also a bond auction that is scheduled to hold on the 15th. So this week, Wednesday, a total of 100 billion is on offer across the 2026 and the 2037 maturity. So we expect to see a lot of demand at that auctions as investors try to reinvest their maturities. So the stop rate at the last auction on the 26th was 11.65%, while the 37 was around 12.95%. Markets currently trading at those levels, so we still expect to see the auction turn out to play at those same levels this week.
Thank you so much, Akwe, for that insight. Very interesting to know that the week, well, probably starts off on a bullish note, we hope, but the equities market, well, what we saw last week, it recorded a 0.68% loss week on week, and that was driven by the loss in Dangote Cement, which is a big guy. The share price dropped 10%, Ladi. We're hoping that it's not going to pull another downer this week. Right.
Anyway, thank God, last week we had about 3 grades, about just 2 losses. So let's see how this week plays out, Will.
Oh, we'll hope to see.
All right, Will, thank you so much. Okay, after the break now, we're doing an opening call to London. That's in a moment. Do stay with us. Welcome back. Right, now let's head on to London now with Juliana. Great to have you, Juliana. I see Royal Mail confirmed the absence of worker absence levels are almost double those seen in 2018 before the coronavirus pandemic. What are you hearing about this?
Yeah, it's not great news for Royal Mail, particularly at this very, very busy period where lots of people are sending Christmas cards and, of course, packages, particularly as consumer habits have changed. And most people now are shopping online. That's an area that Royal Mail have transferred onto. But they have, as you said, have had a large swathe of COVID-19 related illnesses, which is affecting about 32 sorting offices dotted around the country. They have 1,200 sorting offices. Now, they have released an apology to customers saying that there are some issues with handling some goods and that there are delays. So even if you've paid for a first class or second class delivery service, it may arrive much later than that. So they've issued an apology and hopefully things will be sorted out. But it's not looking great, particularly at this very, very busy period.
Yeah, I can imagine. It's a new week. Yeah, what are the expectations for this week?
Yeah, it's a new week, busy week. Of course, Prime Minister Boris Johnson and his Conservative government face lots of pressure this week. More revelations were revealed over the weekend showing that the Prime Minister flanked with two not socially distant staff on his side, attended a quiz. He attended virtually, but nevertheless, people were gathered. So there's another Christmas party under fire. Tomorrow, there's going to be a huge Commons vote on whether or not these new COVID restrictions starting today. Of course, millions of people are working from home, and you can see it. It's not very busy in London, not great for the retail and hospitality sector. And then on Thursday, there's a by-election for Owen Paterson. He was an MP, a Tory MP who quit under a sleaze scandal. So there's lots going on. If on Thursday they lose, the Conservative Party lose that by-election, Boris Johnson could be out. So that's that. Business-wise, let me quickly run through because we have got a busy week. Tuesday, tomorrow, unemployment data currently stands at 4.3%. Analysts expect that to be lowered to 4.2%. Wednesday, very important. Inflation currently is at 4.2%. We're expecting a rise of anything between 4.7 and 5%, well above the BOE target of 2%. Thursday, very important. Bank of England Monetary Policy Committee gather at Threadneedle Street to discuss interest rates and quantitative easing. Not expecting any changes there because of Omicron. And then on Friday, we've got retail sales for the month of November. Really important data. Retail sales month on month, 0.8%. We're expecting a rise possibly to 1.5%.
All right, Juliana, quite a busy week there. We'll be getting more updates from you on all of that. Thank you so much. Enjoy the rest of your day.
Thank you.
All right, let's take a look at the crypto market now. We see the crypto market is still struggling for direction this morning. You see Bitcoin there trying to clear that $50,000 resistance against the US dollar. Let's take a look at the market cap there. We see the market cap about $2.25 trillion. It's down about 0.55%. 24-hour volume traded in the total crypto market about $70.80 billion, down 4%. And Bitcoin dominance gaining back from that 39 level. We see price of Bitcoin about 49,000. Lost that, still trying to break that 50K. It's down 0.19%. 24-hour volume traded in Bitcoin, $22.99 billion. Let's look at Ethereum now. Ethereum lost that 4,000 mark. Wow. Top also market cap. You see BNB there is down 1.13%. Cardano down 3.15%. Solana down 2%. And the only green, surprisingly, is XRP. So up about 0.28% at 82 cents. And the top five gainers, we see RAV there leading that counter. Let's bring in Olumide Additional now, a financial market analyst. Hello, Olumide. Great to have you. Good morning.
Yeah, good morning, Ladi.
Good morning, Olumide. I see this market is still struggling hard. We can't seem to get a direction. What's pushing sentiment right now in the market?
Yeah, I think investors are becoming very cautious. Yeah, we need to understand that this week is a super week where the U.S. Fed will make decisions about tapering the economy. We understand that inflation in the United States is already around 4-decade high. So there are concerns that now that inflation doesn't seem to be transitory, we are expecting the U.S. Apex Bank to show some form of taper. And that means that liquidity will somehow suffer in the crypto market. So we are seeing investors becoming very cautious. They won't want to get bonds. And also, we're seeing that the price around Bitcoin suggests that it's going to be very difficult for Bitcoin to break its record high, this 69,000, because we're seeing that during the weekend, because of the high liquidation we saw earlier in the past 10 weeks, investors are not having a long bullish. The bullish bets seem to have weakened, and we're seeing that anytime Bitcoin tries to break above $50,000, the bears keep climbing on. So that tells you that the bullish narrative is not as strong as it was. Also, you also need to look at that the other market seems to be suffering better than was. Look at Dogecoin, for example, has refused to move at 20 cents, telling you that the narrative is that investors are becoming very picky. They're seeing assets close to NFT, having NFT exposure gaining, and they're seeing assets that have inflationary and mini fundamentals so far in this rally. But I think one thing is clear that Bitcoin, Ethereum, they've had decent gains this year. They're becoming mainstream investment. But the concern is that with the fact that the U.S. Fed might increase interest rates the coming year, what it means is that the crypto market might not enjoy such a bully ride that we saw this year in 2022.
Right, and we see Bitcoin, managed to recover, but most altcoins have been battered. What are your expectations for this week?
Yeah, my expectations are that, I don't see any strong bull grip on the crypto market because I would expect the narrative of the US Fed to be affirmative, meaning that it should be hawkish. So the dollar is going to gain ground. We've seen that in today's market. Dollar is gaining ground against major currencies. And the fact that Bitcoin is even moving around 49,000 means that the bulls are fighting their battles. But any break below 48 tells me that Bitcoin might really touch the 45,000. And if Bitcoin touches below 45,000, then I think I'm looking at below 40,000 this year. But I think for long-term investors, they will have had a very nice Christmas at the waiting because we've seen record gains this year. But for short-term investors, I would advise that don't get too exposed and don't over-leverage yourself.
All right. We know the market is really struggling right now, but I'm sure there's some altcoins that are holding up above water. What are those altcoins for you?
Yeah, exactly. I mentioned earlier coins, blockchains that have NFTs exposure. And, just because of I want investors to ride around. But you need to look at Solana relatively. Solana has done decent gains. Look at Tezos, you look at Argo, look at Cosmos, look at Polkadot. If you look at in the span of 6 months, just 6 months alone, this has given record gains. But you see, the fact that we are seeing the dollar and Bitcoin suffering, no matter how you want to paint it, the short term is that there will be pressure on these assets. But if you look at them relatively, the NFT exposure is giving them and more utility. We're seeing banks going on Ethereum, doing Ethereum contracts with bonds, instruments, and things like that. So we're seeing assets that have real case gaining ground. So I advise investors to really look at those assets with real use case value.
All right, Olumide, thank you so much. Really interesting times for risky assets. Thank you so much, Olumide. Yeah. Enjoy the rest of your day.
Thank you. Yeah.
All right, that's a wrap on the program. Don't forget to join us by 1:30 on Business Incorporated for more updates and developments in the world of business. Thank you so much for watching. I'm Ladi Williams. Bye.